Hi, this is Brian Shannon from AlphaTrends.net. Today is Monday, the 17th of May, 2010, and let's take a look at this S&P 500, looking at the spiders, SPY. The market continues to attempt to stabilize here right now. Last week we had seen some resistance at that 50-day moving average, which continues to rise, and I pointed that out at AlphaTrends that it will continue to rise because this is basically where the market was 50 days ago. So even if the market goes sideways here, that 50-day moving average will begin to rise. What's of concern, though, is that 20-day moving average is starting to, probably drop down through the 50-day moving average on the next day or two, and the market has been stuck below a declining 10-day moving average the last 2 days. We were also not able to get back above the January highs at that 115.10 level. So when we take a look at the shorter-term time frame here, looking at a 30-minute time frame, we saw last week the market broke down through the 115 level that it had gapped up to, and then that's where the real selling began. We'd seen two drives lower, basically one on Friday, then another one today. So the market's bounced back a bit, and you can see here that right now this 114 and a quarter, 114.30 looks like a likely area for this market to find a little bit of resistance, followed by the 115 level. And we also have to be alert that the 5-day moving average does continue to decline, and that rallies really shouldn't be trusted in an environment where we have a declining 5-day moving average over the intermediate term. What's been more of interest to me, and I've been pointing this out each morning at Alpha Trends, is the volume weighted average price since the event. That is the flash crash, Thursday, May 6th. This is the volume weighted average price. That is, you take all the shares, how much volume traded, and here's the average price the SPY has traded at. So what we saw was last week on when that level was given up, then we saw further selling. Now today that level acted as resistance, and we closed right at that area once again. So this 114.30, 114.40, if the market can get above that, then we might see a quick pop up towards 114, 115, 115.10. That is the lows from last week. But again, we're still stabilizing in here, and it just makes it a very tricky environment. If you're choosing to trade in this market, I think that unless you're a very nimble day trader, that you ought to be trading smaller share size, still have reduced expectations overall from what this market can give, and keep in mind the fact that this scenario that I laid out is still a possibility. As bad as the market may seem, we can see that this sell-off in January was very similar to 2007 in the first quarter, followed by a sharp pullback to the rising 200-day or 40-week, in this case, looking at a weekly chart, that 40-week moving average. There's 5 days in a week, so 40 weeks, that's the 200-day moving average. It got shocked down to that level, built a lot of bearishness, and then those short sellers got squeezed. They were eventually right later that year, and more particular in January of '08. But this is still a possible scenario. Doesn't mean it's something a blueprint to look at, but it's just something to keep in the back of your mind as this market, if it can continue to consolidate and build some new levels of support, and then start to stair step higher. And in particular, if it can get back above 118.50 at some point over the next couple weeks, then I would bet we do see a move to new highs, and it'll be determined, how the market acts on those new highs, whether or not it's sustainable or going to be unfold similar to the way it did in late 2007, early '08. Again, just an out there scenario, but something I wanted to keep you aware of. Meanwhile, just kind of focus on these key levels. That is the resistance at 114.40, the potential for resistance there, and then about 115.10. Those are the short-term levels of support, and you have to look at this market still as really guilty till proven innocent, until it can rebuild and stabilize and show a pattern of higher highs and higher lows, at least on a short-term time frame, and there's just not that evidence yet.